Welcome back to the Newport Property Blog, and today I'm going to have a short conversation with you on the subjects of interest rates, purple bricks and hybrid agents. Three seemingly disconnected items, but they are actually linked, as I will explain as the conversation continues. First of all, to say that I haven't uploaded a video for a little while, and this is simply because there have been so many events, very fast moving. Even though you might think that this is bread and this is manna from heaven for somebody who does a blog, well, actually no, because all you end up doing if you make a video or other kind of blog entry on every little event, you just become a commentator. And what people really need, I think, is analysis. And analysis takes time, and analysis takes effort and thought. And when things are changing rapidly, almost day by day, as things have been really over the last 6 weeks period, it makes it difficult to find a point and say, well, I think this is, we've now reached a point where I may have something of interest or relevant to say on the circumstances which are unfolding. I think we have now reached that point, or certainly there's enough happened to be able to give it some perspective. And so we shall start. The last video I did was talking about the change in the property market generally, and nothing that has happened has done anything to change the obvious direction of that change, but it may very well have made the effects more immediate, sharper, and probably more prolonged as well. We'll have to wait and see. I mean, certainly under the Truss administration, our worst possible nightmares seem to be about to be realised. We hope that under this new Sunak administration, that it may not be quite so bad. But I think we have to anticipate that it is going to be bad, which is what we've seen today with a 0.75% interest rate, taking the bank base rate to 3%. This will have an impact, obviously, on the property market, because this is going to affect mortgages, mortgages coming off fixed rates onto new fixed rates or variable rate mortgages. But most importantly, most profoundly, I think, it is going to kick the support from the base of the property market, because the people, as always, it seems to be the case in this country these days with things that happen, the ones that will feel the brunt, be most affected, are those who are looking to become first-time buyers. And this is going to become a major obstacle. The cost of finance, the availability of finance, the affordability of finance are going to be major obstacles to another generation of young people who are already struggling against intense headwinds in order to get themselves onto the property ladder. And in many cases, of course, they're being helped by parents who themselves are being buffeted by the very same winds. So all the talk of a change in direction of the property market, going from being a very, very strong seller's market to a very, very strong buyer's market, is only exaggerated, it is only sped up, is only intensified. And this, again, going from one extreme to the other isn't good. You really want a market which is balanced, where the supply of property is closer in match to the demand for it, because then you get movement, then you get relative stability in prices, predictability, and other aspects you would think would do likewise, including interest rates and other underlying factors as well. Other related costs to the buying process should be more stable as well. A lot of uncertainty, the talk of the longest recession ever, interest rates going up, it is going to disincentivize a lot of people trying to get onto the market, and it's going to hurt a lot of highly leveraged people as well, people who have borrowed heavily at a cheap rate are now going to find themselves, if they're on a variable rate, suddenly paying huge amounts more than they had originally budgeted. Mortgages that are coming off a fixed rate are going to come to onto a new fixed rate which is much higher, or a variable rate, which is going to be significantly higher again. Other kinds of finance will be affected too, so this will have a knock-on. Overall, it is, unless you are one of those very fortunate characters who are cash rich and have money in your pocket to burn in which to buy a property outright, it's going to get difficult. And so I did say it's nice to have a balanced market. A market where it just goes against, if nobody can afford to buy and lots of people have to sell, which is the inevitable consequence of severe recession. It doesn't look particularly good. It's going from one extreme to the other, and that's not helpful. And this is in a particularly damaging and negative way, even more so, really, than the seller's market, because the only people that manage to benefit are the people who have, the money to burn, which tend to be large buy-to-let interests, not even individuals, just interests, and that again brings its own distortions to the market. Very sad. I hope it doesn't get as bad as it seems likely to be. Okay, moving on swiftly. In the subject of things going wrong, people having problems, we have two big news items in the property industry so far. One is the disruptor company, Purple Bricks, who we learned have been calling in pretty much most of their staff, the greater proportion of their staff, and saying, I'm sorry, we have to let you go. This is a company that has been obviously troubled for a while, I think it is fair to say. They've changed their model, they've changed how they charge people, they've changed the way that they employ people, going from self-employed to salaried, and it looks as though that what's going to happen with this is that they're going to go back. Not quite so easy the other way, because of legislation, you can't just say, well, you were employed yesterday, today you're self-employed. You effectively have to sack somebody, and then with all that goes with it, and then if you want to try to re-employ them as self-employed again. But this is causing obviously a lot of disruption, and I keep hearing the figure of around 75% of the workforce at Purple Bricks are being made redundant, and that's a lot. And that was going to have a lot of impacts across the industry in many, many ways. As a consumer, if you are one, if you are a vendor looking to put business with them, I would be very, very cautious about going for the cash upfront bit, because with any company that is in trouble, again, it's bad enough to my mind is that you pay them money in the anticipation that they're going to sell your property, and you remove from the agent the incentive to do a good job or even to make any effort whatsoever. When that company is in trouble, you can pay the money, and that's just money down the drain. It's double jeopardy. Stick to a traditional model, if I were you, of paying a commission at the end, because at least you're paying something when you have funds in your hands and you've actually achieved the objective of the exercise, which is to sell your house. And if you don't, and you've done it presumably at a price that you're happy with, and you don't have to take it because you've already paid the money and the agent isn't going to show that much interest if you turn your nose up at what they've offered you. There is also the news that the Boomin Portal website has been put into liquidation. It starts to paint a picture of an industry in absolute mad panic and falling apart, and I wouldn't discount that entirely. But there is a caveat I must add to this, which is that Boomin and Purple Bricks are all owned by the same gentleman. And I think we can infer by this, again, from my own dealings as an agent with Boomin, that it wasn't something that was clearly making a lot of money, so it must have been costing a lot of money, and the money that it cost was clearly coming from the profits coming from Purple Bricks. Well, Purple Bricks clearly is no longer making a profit, which is why he's having to lay off up to we hear 75% of his staff. That is, I must say, hearsay. I haven't had that confirmed officially, but this is the figure that people, many of whom are fairly senior figures in the industry, and one would therefore suppose would know, are quoting. So this is the figure I keep hearing, and I think I have to assume it's a credible figure. So obviously they're losing money, and the first thing you do, the pet projects have to go, and the booming website is gone. Does it mean that the other portal websites are safe? Well, I have a question mark on that. I imagine that Rightmove, as the established market leader, is going to be safe. They're very profitable. They make a lot of money. It upsets a lot of agents that they do. There are questions about value for money, but in terms of its financial stability, I believe it is stable. But things like Zoopla are on the market, well, you have to raise an eyebrow and be a little bit careful. But that's only really of interest to agents. As somebody, a vendor or a buyer, it doesn't really matter. Either the website is there or it isn't. And even Boomin is still online. It's still functioning, and it appears that it still has full functionality. It hasn't been closed. It isn't restricted as far as I can tell. And that brings us on to what does this tell us about the rest of the market? Because estate agency, as things are going from a very slow period initially, where, last 12 months, where properties have sold quickly, but there's been remarkably few of them to go around, is going from one extreme to the other, which the same net effect, they're not making very much money because they're not able to close a huge number of house sales in total, which is what they need. And the established high street agents are actually quite vulnerable. Look at their nice plush shops in prestige high street positions with all the fixtures and fittings and all the rest of it. Well, that doesn't come cheap. It doesn't come cheap to put it in. It doesn't keep cheap to maintain it. To pay the leases and all the rest. It's got salaried staff, and they don't come cheap. If there is going to be a prolonged downturn, the theory has to be there's going to be quite a large shakeout because it's a big industry with not being supported by a particularly large active pot of business, and so that is going to reflect. I think what we have seen with Purple Bricks, a hybrid company that tried to start looking more like a traditional company by employing everybody and almost immediately, getting into serious financial trouble, probably masks that there's an awful lot of similar situations with well-known, popular high street, both independent local ones and national chains in the traditional sector. Which brings me on to who are the people who are best likely to ride out this current storm. And it is the hybrids, the people who are just self-employed agents associated with a larger managing compliance body, and who operate usually from home, or that may have an office services address. People who have very low overheads, who can offer a much better service because they need less properties on their books at any one time, who can give the vendors a much higher level of attention, personal attention, who take ownership of the property sale, which is again a key feature of pretty much every hybrid organization that I've come across in my time, which is that it is that person that turns up to do the appraisal. They are the ones that organize the listing. They are the ones who process the inquiries. They are the ones that do the viewings. They are the ones that usually push with the chaser and the conveyancers, of course, at the end, who are actively working to get the property over the line and completed. Well, this is different to what you get in the high street. You usually get some spotty teenager coming around to give you an appraisal. You'll see some more people coming around to do to do, to do the viewings. It's rarely going to be the same person twice, and in fact, it tends to be a feature of it. You may have a contact, which is an office-based person, usually somebody referred to as the chaser, who sort of guides things through, but it's not the same. They've never seen the property, they don't know the property, they've probably never met the buyer. It's a very disjointed situation, which is why a lot of people are unhappy, and it has other negative results as well. As I look at a lot of market data and I see some of these so-called market leaders in my area, and I look at the number of properties they've got on, large number, and I look at how many remain unsold for a very long period of time. They're running around desperately trying to get listings, but once they've got them, they don't seem to be really doing anything much with them, and there's no real coordination. Nobody takes ownership of the sale. This is the trouble with the traditionalists. Nobody takes ownership of the sale. So it just sits there. Unless the vendor is phoning up and screaming blue murder literally every other day, nothing is going to be really done about it. With the hybrid, it couldn't be more different. And of course, I am a hybrid. I do that myself, but I did it for a reason. It reflects how I've operated as an independent letting agent for many, many, many years, and I saw exactly the same philosophy being employed. Other people have thought of it too. Okay, which is nice. So I can see that very same ethos transferred into the sales arena, and it works. It gives a much more fluid, a much more dynamic, and a far more effective and proper service to the vendor than dealing with multitude of people, none of whom really care all that much if you speak to your high street branches. So I think I would say to you, if you're looking to put your house on the market now, look at the hybrids. I know the instinct is to go to the high street boys and girls, but you're probably not going to get the same amount of attention. Certainly there's loads of property coming on. They're just going to be interested in chasing those potential big commissions at the top end. If you're in a lower or middle range property, they are not really going to be that interested. With a hybrid, it's different. Every property they take on matters to them because they're probably only handling 3, 4, maybe half a dozen properties at any one time. They can't effectively deal with more than that. And so in order to give the service, in order to keep their cash flow going, they've got to sell each and every property, and they will go the extra mile, doing things that your typical traditional estate agent wouldn't even dream of doing. So all perfectly legitimate and moral, of course. Don't take me wrong on that. But they will make far greater efforts on your behalf, go into different forms of media, etc., 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 in order to get your property sold. So there we are, a quick review of a not very happy situation in the property market, and some general advice, which is that in times such as these, the high street boys and girls are probably not your best bet, and it is far better to take a risk and to look at something that is, to most people, is going to be new, because in most of the rest of the world, this isn't new at all. It's normal, and it works very, very, very well. And you would be well advised to take advantage of it. Thank you very much. I hope you've enjoyed. I hope I haven't depressed people too much with the reality of the situation we have at the moment. And I hope that you will join me next time when I upload for the blog. Thank you very much.